You ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 28th day of September, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our home page at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, there are two other ways to join the show. Just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. Also, we stream live during this show each day on our YouTube channel. It's easy to remember. You already know youtube.com. Just add a /CFRN. youtube.com/CFRN. Not only do we broadcast live each day during this hour, or these 2 hours, we archive each and every daily show, and currently we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that, we'll open with a word of prayer. Now, as we head into this prayer time, I do encourage you to pray along with me. And sometimes prayer's tough, especially during the storms of life. And, well, God knows we've had some storms these last couple of years. And it sort of seems like things are starting to come to a head. But we might have said that even a year ago. So God's ways are not our ways. His thoughts are not our thoughts. And His time's not our time. So we need to learn that we serve a faithful God. Even in the face of disappointments, we can trust Him at His word. As we begin to see the power of prayer and God's faithfulness in our lives and in the lives of others, it becomes easier to keep our eyes on God. The enemy's constantly trying to distract us and lure us away from the path that God has set for us. I encourage you to keep your eyes on the Lord, not on the waves. If you do, He will take you through the storm safely. God is not looking for perfect people. He is simply searching for those who will be devoted to Him. And yes, being human, we will fail sometimes. But when we do, we simply get up, confess, and trust that our God has forgiven us. Heavenly Father, help us all to be faithful in our walk with You, even amidst the storms of this life. Help us to keep our focus on You, God, and Your purpose for our life. Open our hearts to desire only godly things, to shun evil. Bless us with your righteousness. Grow our faith as we exercise our faith in you daily. Teach us to love just as you so loved the world, that you gave your only begotten Son, that we might have everlasting life. God, we pray for your peace that surpasses all understanding. Even as the storm rages around us, may we stand in peace, knowing that you walk with us. And it's in Jesus' name that we pray. Amen. Amen. All right. Happy Tuesday, guys. I do hope it's a happy Tuesday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. The Dow, hope you're sitting down. The Dow currently down 511 points. That's 1.5%. NASDAQ is down 374 points. That's 2.5%. The S&P 500 is down 84 points. That's almost 2%. And the Russell 2000 down 39 points, 1.75%. Now, if you've been tuning into the show over the last few weeks, few months, then none of this comes as a surprise to you. This is pretty much what we've anticipated, and we'll talk more about that later in the show as we get into the charts. In the commodity basket, crude oil down 74 cents. That's a drop of 1%, trading 74.70 last. Gold down $14.60, trading 17.37.90 last. Silver down 22 cents, trading 22.46 last. Now for gold and silver, that's a drop both of, and crude, all three of them. It's a drop of roughly 1%. In the Asian markets at the close, the Nikkei was down 56 points. The Shanghai was up 19. The Hang Seng posted a gain of 291 points. That's 1.25%. And in the European markets at the close, the FTSE dropped 35 points. The DAX fell 325 points. That's a little over 2%. And the CAC fell 144. That is also a little over 2%. So, we had a mixed day in Asia. Shanghai and the Hang Seng, the only green really on the screen in regards to global markets. It was a red day in the UK. And it's a big red Radio Tuesday here in the US of A. So with that, we'll go to Michael, get a recap of everything that happened this morning in the live training room. After that, I'll be back and we'll go over the Logic 247 alerts, the Concierge Trade alerts, and of course, at any point during the broadcast, if you have a question, just type it into the chat box and we'll be happy to answer it for you. Michael, I can see your screen. It's all yours.
All right, here we go. All right, good afternoon, everyone. Today is Tuesday, the 28th day of September, 2021. 28th day of September. Wow, we get so far into 2021 already. All right, so if you have not taken a free trial with us and you want to take a free trial with us, then go here to the home page at eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click on that confirmation link, we don't know that you took a free trial, so you got to make sure you do that. All right, now the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 28th day of September, 2021. Today we made 30 ticks in crude, 50 ticks in gold, and 9 ticks on the ES. Big difference from yesterday. I mean, all we need is volatility. It doesn't matter if the market's going up or down. We just need volatility. And yesterday, I don't know if you remember when we were doing this time yesterday, the ES and the Dow were on one side, and the NASDAQ and the Russell were on the other side of 0 on the day. And I had said I think it's all going to resolve to the downside, but the two that were still showing some sort of movement, I believe it was the Russell and the NASDAQ, or the Russell and NASDAQ that were going sideways, or the Russell and the ES that were going sideways, one or the other. But I thought it was going to resolve to the downside yesterday, and apparently it did. I'll go look at that in just a minute with you. But either way, plus 30 on crude, plus 50 on gold, and plus 9 on ES, put us at plus 912.50 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades this morning. So on the month now, we're at $8,867 a contract. That's over 19 trading days, averaging $466 per contract per 2-hour trading day. On the year, now we've gotten our goal for the day on 184 out of 187 possible days. So that means 184 times this year we have gotten our goal. So that means if you go through every one of these columns, 184 times, it's going to have a number of 100 or greater. And you know, when you get to one like this, not 100 or greater, or one like this, not 100 or greater, but you're only going to find 3 of those this year. So that is really what you want to do, just to be consistent. All right. Now that puts us at $108,870 with 1 contract in 2 hours on the year. So 187 trading days, averaging $582 per contract per 2-hour trading day. If you were to stop trading when you got the goal for the day, that means when you reached this number, after this many minutes, this many trades, see how many ones there are in there so far this month? And it's getting to be like that pretty frequently. That means we have a lot of volatility. If you have a lot of ones in here, that means we're getting a lot of volatility. If those numbers start to drag on, where you have more, look at all the ones in here, but where you have more that are like 5s and 6s, that means that, you know, for a period, like right in here, 10s, 15s, for a period there where it was not 1s and 2s, the market was a little more complicated to trade. Not impossible, but just a little more complicated. Anyway, so if you were to stop trading when you got your goal for the day and you added 1 contract per month, you would have worked a total of 51.57 hours this year if you did everything exactly the same as I did, and you executed exactly the same as I did and got filled and all that stuff. And your hourly rate for those 51 hours and 57 minutes would be $2,166 per hour. Okay. All right. Let's get into what actually happened here. Now, we had a lot of trades on pretty much every market. They're really close, as a matter of fact, with the number of trades. So I'll just start out with gold. Okay, we'll start out right here. Now, I believe gold is where we got our goal for the day on the very first trade. I didn't get filled on this one. I saw it coming in. I had just sat down and I saw it coming in, but I didn't get a fill on that. But I did grab onto the next one, and I actually thought I was going to end up with a break even on this, because right here where it closed down below the MA1, I went to bump my stop to break even and I couldn't, and then I went again to bump it to break even and I could, and then it went down and it hit the goal for the day. So I picked up 10 ticks on that first one. Now when I say I couldn't bump it to break even, it's because it had pulled back to the break even spot and it wouldn't let me put the order there. But then once it did let me put it there, it just went down to the plus 10 tick spot. Now after that, we picked up 3 ticks to put us at plus 13 right there. I missed this trade, and gold was doing really well hitting the target numbers and the pullback numbers. It was doing a pretty good job with all that. You can see I had a target number in here that we couldn't go for after this trade, because this was about the limit right here to where I would take a short with the cycle going up at that steep. I mean, I did take the short there, and we ended up with, it looks like 5 more ticks from here to here. We ended up with 5 more ticks, and we're at plus 18. And then went from plus 18, 6 more ticks here to get to plus 24. And you see it was hitting all the pullback numbers and the target numbers that I was giving out when I was giving them out. There was a short here I missed, along here, here, and here, all which would have been profitable. Then right in here, we went from 24 to 33, so I picked up 9 ticks on that one. Here, I went from 33 up to 36, so we picked up 3 more there. 36 to 44, so I picked up 8 more right there. And 44, hang on, we had a break even there. 44 to 50, so it looks like I picked up 6 more right there. And is that all the trading that I did? That's all that I kept track of. It looks like so we did even better than what the results say, because there was a good trade right here and a good trade right here that I didn't keep track of. And then we got into the break. Okay, I'm pretty sure, let me look at this and see if I remember. 34.1, we only got 5 ticks out of that, that's right. And I didn't add that on, and over here, let me see if I remember this. I don't remember what I got on that one, but anyway, we picked up 5 there and something there. It looks like 6 or 8 right there. And that was where we stopped trading on the morning session. Okay, now let's see. During the break, it looks like I draw a trend line. During the break, it looks like there would have been a long trade right here. That probably would have been a break even for me if I had taken it. And a short trade right here that would have given a little bit of profit. And a long trade right here that would have given some profit. And that was it on the gold during the break. So we accounted for 50 ticks, but we actually probably got about 60 something. Yeah. Anyway, to crude oil now. And crude ended up working out well toward the end of the session. It was, I had a couple of good trades in the beginning, but right here we missed this one. And we had highlighted these areas right here. It didn't get to either one of those right away. But then crude did start to move, and I was going over a bunch of stuff this morning, and I didn't end up getting a trade set up out of this. All the way down here, I missed all that. And right here, and I missed this, but I did jump in on this right here finally, and we picked up 16 ticks on our first trade right there. Now, from there, we went here where I didn't get anything, here where I got a break even, then another break even. Here where I missed a really nice trade right there. I got a break even on that one and a break even on that one. So I had 1, 2, 3, 4 break evens right in a row, all leading up to a stop out right here. Hang on, I have to sneeze. And this stop out was pretty much to the tick. It went through it a little bit, but it did stop me out -8 ticks, and that put us at +8 right there. Okay, so from +8 there, we went here, we picked up 12 to get us to +20. Then 1 to get us to +30, then 9 to get us, I'm sorry, 1 to get us to +21, then 9 to get us to +30, and then turn around and started moving up. I missed that one, I got a break even there, and I got a break even there. And these were the numbers that I was giving out that it should get to, and it almost got to the final one, and then it turned around and started coming down. Now, on this big move down, we didn't get a trade set up in there. There was a short right here that would have given you something. I don't know how much you would have gotten out of that, probably 3 or 4 ticks. I would have probably gotten 3 or 4 ticks out of it. Okay, and then it went sideways, and I wouldn't have done anything through here or even all the way over to here. So we ended up with +30 on the crude this morning. All right, and the ES. Now, when it was all coming together, it didn't look as ugly as it does right now when I'm scrolling through it. It must have looked kind of ugly because I really didn't do all that much with it. But wow, yeah, there was a lot of movement in there, wasn't there? Okay, so it started out right in here, giving this short trade right here. Now, I was doing something else at the time, and I didn't see it. It went right down into the weekly trading zone. And that was at 9:33, so for 10 minutes it was in the zone, just chopping around. Gave another short right here, and I missed both of those, and this one. These two would have given some profit. This one, 91 quarters, so we'll say we enter at 91 and it pulled back up to 92.5. Yeah, so this one would have been a nice trade too if you'd gotten into it. This is the one that we finally did first get into. We picked up 5 ticks on that. And it was going pretty well down toward the target numbers. I missed this short right here, which would have been a momentum short trade, but the cycle is starting to move up on that. Either way, it would have been a momentum short trade that either stopped you out or you got to break even on. Depends how fast you are with your DOM. And over here was a momentum short trade that I ended up with a break even on, followed up by another trade that was not a momentum trade that I didn't get. And then in here, right at 10 o'clock, it looks like there was a short there and a short there and a short there, none of which I got. And there was a short here and a short here that I didn't get. And, you know, I was so busy with the other markets, I wasn't paying that much attention to the ES because this bit of chop right here was looking the same as this bit of chop right here when I kept glancing over at the ES screen. This bit of chop, I wasn't looking at the numbers as much. But then when I did finally start to draw these, because I was drawing these on all 3 markets at the same time, you know, I was looking down here. This was a good target number for this to go to. This was a good follow-up, then this one, then this one, then this one. And it kept hitting all the target numbers on the downside. And, you know, the more it went down, the more the targets opened up, it seemed like. There was a momentum. It wasn't actually even a momentum trade. This was a trend line trade here that would have been a break even for me if I'd have taken it. I didn't take another trade until way over here. So we're +4, then I took 8 ticks here to get us to +13. And there's just a whole bunch of nothing. A break-even trade, a break-even trade, a break-even trade. And from 13 here, I went to 17, so I picked up 4 ticks there. And then I stopped out right here to put me back to +9. Okay, then this was all during the break here. Now, if you were to follow it during the break, I wouldn't have done anything in here or here or here. Now, the reason I wouldn't have done anything here is because we had lower highs and higher lows. So I would have wanted to break out like this, but then by the time it did break out and it gave this up close right here, your trend line would have gone down like this. So the black step line would have crossed right here. By the time you got the up close right there, that would have been above the trend line. See, I'll draw the trend line for you so you can see it a little better. Okay, actually, you could have gone long right here. Either way, I wouldn't have done it. And it kept going, you know, it gave enough room to get some profit or at least a break even on the trade. And then it went sideways and didn't give any trade setups. It gave one. No, it didn't even give anything right in here. Right in here, it gave a nice short right there and right there. And that was about it. It really didn't give, it gave a lot of opportunities if you stuck with just the ES today. Okay. There are a lot of spots in there where you could have taken a trade for 4 ticks or 6 ticks or 2 ticks. There's a lot of volatility, but there was also a lot of sideways movement, stuff like this and this and this and this and this. Those kind of markets I'll just stay away from. Give me something like we had on crude and gold today any day. All right, all that said, we're back here to the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CTC risk disclosures down at the bottom. Today's the 28th day of September, 2021. Made 30 ticks in crude, 50 ticks on gold, 9 ticks on the ES, put us at +9, 12.5 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we did a total of 23 trades this morning. So on the month now, we're up $8,867 a contract. That's over 19 trading days, averaging $466 per contract per 2-hour trading day. On the year, I have gotten the goal for the day on 184 out of 187 possible days, and that puts us at $108,870 a contract. That's over 187 trading days, averaging $582 per contract per 2-hour trading day. Now, if you were to quit trading when you got your goal for the day, every day this year, and added 1 contract per month, you would have only traded a total of 51.57 hours. That's if you executed everything exactly like I did. You would have traded a total of 51.57 hours, and your average hourly rate on the year so far would be $2,166 per contract no, I'm sorry, that's not true. $2,166 per hour. It's not per contract. It's per hour, because this is adding one contract per month. So over here, you know, the 1 minute that it took today, or the 4 minutes, whatever it was, one trade in 4 minutes that it took today, that would have been $900 for 4 minutes. Yesterday would have been $900 for 2 minutes. The day before that would have been $900 for 4 minutes. So in here, you would have a total of $2,700 for a total of 10 minutes of work. So it's like $270 a minute in there. You can break it down however you want. The goal is to get the goal and then stop trading. All right, you don't want to turn into an over trader. All right, so that brings us here. If you have not taken a free trial with us and you want to, then go to this page, eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you gotta click on that link, okay? Okay, that's it, guys. With that, I'm gonna pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am
Excellent.
ready. Recap of the recap.
Today, it took 4 minutes and one trade to get to $100 per contract.
Good job. Excellent. Okay. That's what's happened in the last 2 hours today from 9:30 a.m. Eastern to 11:30 a.m. Eastern. And here's what's happened since the markets opened Sunday night with Logic 247. The markets open Sunday night, 6 p.m. Eastern. That's when we go to work. Most traders are waiting for Monday morning, 9:30 a.m. Eastern, for the markets to open. But those of us who trade futures know that the global markets open Sunday night, 6 p.m. Eastern. That actually begins the Monday session. Just like last night at 6 p.m. Eastern, that began the Tuesday session. And tonight at 6 p.m. will begin the Wednesday session. So far this week, we've issued a total of 18 alerts. 2 never triggered. Still waiting on the outcome of 5. So we've had 16 actionable alerts, of which 3, or 19%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Those alerts that come out around the clock, could be 2 a.m., could be 2 p.m., we have traders around the globe. Those are based on current price action. However, I build into each alert, to the best of my ability, a minimum of 20 minutes for you to actually receive the alert on your phone, on your tablet, on your PC, on your Mac, and then to get settled in front of your charts so that you can actually study the alert and study the charts. The purpose of the alerts is to show you a window of opportunity before price even gets there. It teaches you how to find these windows of opportunity, because honestly, the market is filled with hours where there's no high probability, low risk trade setups. And sitting there staring at the screen all that time will burn you out pretty quick. Purpose of the alerts is to alert you to the fact that, hey, when price gets to this number, there's going to be an opportunity, a high probability, low risk trading opportunity. And so the more times you get the alert, go to your chart, study the chart, and then trade the alert in your simulator first until you qualify to go live, pretty soon you start being able to spot these windows of opportunity yourself. And that's the goal here. The goal is to make you self-sufficient. The goal is to get you to a point where you don't have to depend on anyone or anything to tell you when to get in and when to get out. because you've learned how markets work, you've learned how price flows, and when you look at a chart, it's just like reading a newspaper or a great mystery novel. Now, again, those logic alerts are based on current price action. Our original alert service, the concierge trade alerts, are based on historic price action. This comes out not around the clock like the logic, but as a static report shortly after the Globex opened each evening. Last night it was 6:35 p.m. Eastern. You'll notice there's two numbers for each market. The way you handle this is you go and draw a line in the sand on your S&P chart as an example, here and here. Once this is posted, if price starts trending up towards 44.52, that's bullish. So our strategy will look for opportunities to buy the market or be long. It's also where if you see price trending up to 44.52, all the rules of engagement that you've learned each morning in the live training room from Michael and Valerie, that's where you get to use those skills to yourself, find opportunities to be long the market. If price starts trending down towards 44.17, of course that's bearish, and so you'll use logic and the skills you've gained in the live training room to find opportunities to be short the market or sell the market. You just draw a line in the sand at each one, and you'll see that as soon as we go to the charts here in just a moment. If you want a screenshot, feel free to grab one, because we'll walk through each and every one of these charts. Okay, I got a couple of headlines that look a little interesting. Senate Republicans have blocked the bill needed to avert the shutdown. Senate Republicans yesterday blocked a measure to avert a government shutdown and possible default on federal debt, pushing the country closer to a fiscal crisis. The vote was 48-50, with 60 votes needed to advance the legislation. No Republicans joined Democrats in support of the bill. Congress has through Thursday to pass a government funding package to prevent a partial government shutdown on Friday. Treasury Secretary Janet Yellen has warned Congress might have to act as soon as next month to prevent a first ever federal debt default. Democrats also are trying to resolve infighting so they can pass a $1 trillion bipartisan infrastructure bill and a $3.5 trillion spending package. Both bills are crucial for President Biden's economic agenda. He's got one more shot here to pull something off. We see how he's handled the COVID pandemic. We see how he's handled Afghanistan and our military. We see how he's handled the southern border. And I don't think anybody in any party is particularly happy with the outcome of any of those handlings. So he got one more shot. Even his own party and his own staff are starting to look at him a little sideways. Some of you may be old enough to remember this name, John Hinckley. He was granted an unconditional release. He is the man who tried to assassinate President Ronald Reagan in 1981. A U.S. District Court Judge Paul Freeman in Washington said Hinckley could remain free as long as he remains mentally stable and follows a set of rules imposed when he left a Washington, D.C. hospital in 2016. Hinckley was 25 years old when he shot and wounded Reagan outside a Washington hotel. He also shot 3 others, including then Press Secretary James Brady, who was paralyzed and passed away in 2014. A jury, and that's where we got the Brady bill. A jury in 1982 found Hinckley not guilty by reason of insanity, but he was committed to a mental health facility for 3 decades. At this point, the ball is in Mr. Hinckley's hands. according to Assistant U.S. Attorney Casey Watson. Okay. Hospitals are bracing for staff shortages, not because there's more COVID cases, but because there's fewer doctors and nurses. Hospitals and nursing homes are braced for staff shortages as deadlines arrive for healthcare workers to get vaccinated against COVID-19 in several states, including New York and California, our two largest states. Some administrators fear some employees will quit or face dismissal or suspension rather than get the shots. Now, folks, these people went to medical school, whether they're a doctor or a nurse. They know probably a little more about medicine and vaccines and stuff than the average person, than you or I. If they're fearful of getting this shot, I mean, who better? Which example should we follow? Mr. Fauci, who seems to flip, from one direction to the other every other day. A bunch of politicians, or people who actually went to medical school, people who treat patients on a daily basis. Now, Dr. Fauci, he does have doctor in front of his name, but when's the last time he actually treated a patient? I don't know if he ever has. I do know he's the highest paid federal employee. But I digress. If doctors and nurses are saying no to the shot, then each one of us needs to pray prayerfully about what we should do, what our family should do. And we need to get prepared, because a staff shortage, if there's a staff shortage created by doctors and nurses walking off the job, then when you get into an accident, fall off a ladder, have a car wreck, something completely not related to COVID or vaccines, you just are rushed to the emergency room because you need help. Nobody's home. That's the scary part. Killings surged by nearly 30% in the United States last year. This is from the FBI. They released some data. The jump was the largest in a single year since the 1960s, when the federal government started compiling the national figures on murder and manslaughter. So killings surged by nearly 30% in the U.S. last year. I wonder if it could have anything to do with all that rioting we had in the streets. Something to think about. President Biden, he's not confused about the vaccine. That's one thing, because he got his COVID-19 booster shot yesterday. Newsom signs a law making universal mail-in voting permanent. They re-elected this guy. That's basically what happened. He did such a poor job. There was a call to kick him out, and either the citizens of California or those machines in California re-elected him. He has signed a law requiring that election officials send a mail-in ballot to every registered voter. The move made California the 8th state to make universal mail-in ballots permanent. Well, the world that you and I grew up in, it's gone. It's just gone. What's the new America going to look like? I don't know. The only people who can do anything about it are you and I when we go to the polls and vote. And I know that almost at this point seems like an act of futility, because do our votes count? We've always wondered, does my vote count? But now we ask the question from a different vantage point. And you know what I mean. Federal Reserve banks of Dallas and Boston said Monday that their presidents are stepping down after their stock trading during the coronavirus pandemic triggered a review of the central bank's ethics rules. You'll hear lots more about this The Biden administration proposes a rule to firm up protection for the Dreamers, and you know who those are. A jury finds R. Kelly guilty in his sex trafficking trial. Good for them. Federal judge and a federal jury in New York on Monday found R&B singer R. Kelly guilty of racketeering, conspiracy, and sex trafficking charges. Prosecutors said Kelly used agents, bodyguards, and others to lure and trap girls and young women who he then sexually abused. Kelly also was convicted of violating the Mann Act, which bars travel over state lines for illegal sex. Kelly will be sentenced in May and faces from 10 years to life in prison. Kelly's lawyer said the defense was disappointed with the verdict and was considering an appeal. The U.S. attorney said the jury delivered a powerful message to men like R. Kelly that they will be held accountable for their behavior. My thoughts go to Mr. Epstein, but those are two different guys. Both wealthy, one a little more so than the other. Instagram is pausing plans for Instagram Kids. The app, which would have been for kids under 13 years old, received so much backlash that execs decided to put the project on hold. Tesla's new software update can grade your driving skills. The highly anticipated update will let drivers with good safety scores request the full self-driving beta. That means you don't even have to touch the wheel. A black Google employee said security took him off the campus because they didn't believe he worked there. Why didn't he show them his Google ID? I don't know. The employee is an associate product manager and a Harvard alumni. And of course, he shared the story in a tweet that went viral, and it's been already reported on by Forbes. If you're a Prime member with Amazon, your Whole Foods delivery order is going to get $10 more expensive. A lot of people didn't even know this benefit existed. After years of offering delivery-free groceries for Prime members, Amazon is tacking on a $9.95 delivery fee starting October 25th if you order your groceries from Whole Foods. Amazon's bringing a pay cut to up to 23% for workers who guide trucks and drivers into its delivery stations in the UK. The marketplace giant claims the pay cut will align the UK with its pay structure across Europe. Netflix's Drive to Survive has an audience of more than 50 million people, according to the McLaren CEO. Zach Brown said the show had substantially helped bring fans into Formula One racing. And the Elizabeth Holmes trial continues. I encourage you to watch or listen to those podcasts. Reporting from the trial, Adam Lashinsky describes damning testimony from a former Theranos lab director who recounted faulty blood tests and Holmes' push to conceal the problems. You're going to hear more and more about this as the news tightens, I guess. All right, here it is, the daily chart of the S&P 500 E-mini futures. Here we were yesterday. We said if we closed below the BBC, we would most likely drop to the 50% reverse fib on the daily chart. Now, these fibs were drawn from the all-time historic high to this low. We spent 1, 2, 3 days punching at the 62% reverse fib. Yesterday, we reached up to the area we talked about all last week, where the bearish cross took place. Now, everything that we do, everything that we teach is fluid across all markets and all time frames. So this is as true on a 5-minute chart or a 30-minute chart as it is on a daily chart. When you have a bearish cross that leads to an extended move, the first time price revisits that area, in this case, because it was a bearish, not a bullish cross, we said when price revisits that area, we will most likely find good resistance, and that will determine whether or not we get another leg to the downside. Leg, retrace, leg. That's right, you heard it here first. The only major obstacle that price had to overcome was a little bit of blue and climbing here on the CFMA1. Now, this looks as though price moved in a straight line. Price rarely moves in a straight line. This is a daily candle. We're going to go to the 30-minute chart here of the S&P in just a moment, and you'll see exactly how price moved. We came down through the 50% reverse, the 38. We just took out the 24. Okay, next area for support, 43.23. And it just so happens we have a weekly trading zone, our lowest weekly trading zone for this week at 43.23/43.24. After that, the low put in on September 20th, and that low being 42.9375, the low right here of September 20th. That's the next potential support. Once this low, if we take out our lowest weekly trading zone, 43.23/24, and look for the low of September 20th as support, if that fails to hold, we then have a window of opportunity, okay, right here. And that ultimately takes us down. There's a potential for support here. That's why there's a gap between the two windows of opportunity. So we closed this window back on this day, but we've got this window, and then we've got potential support right where the horizontal line is on my cursor, and then we've got this window. Okay, now that looks pretty drastic. The 24% fib of the entire move up that we've seen last year and into this year is way down here at 39.83. Now look where we are. Price always reverts to the mean. In our case, the mean is the BBC. But price also always reverts to the fibs. There's always pullbacks, there's always retracements. Okay, now, could price go higher before it pulls back? Before it reaches down to the 24% fib? Of course. Again, price rarely travels in a straight line. So we have to deal with what's in front of us on a day-to-day basis. But so far, this is doing pretty much what we've talked about for the past week. We need to see what happens at the low of September 22nd. If price takes out the low of September 22nd and look for support at the low of September 20th, if that fails to hold, then we're talking about the low of July 20th. And if that fails to hold, July 19th low. Okay? So that's everything you need to know right now off of the daily chart. Once price finds support and attempts to rally, when price moves up to the BBC, we expect it to be good resistance. And as you can see, that's exactly what happened here. You'll see it as we go to the smaller time frame charts. Again, everything we do is fluid across all markets, all time frames. So we've had our leg, we've had our retracement. Now, do we end up putting in a double bottom, or does this leg extend further? As long as we've got red and falling in the picture, and after today's close, this little flash of blue that we had yesterday, when there was still some bullish hope that this thing could get itself turned around, take out that high, and make a run at the all-time high, we're presented with a very different picture today. So wherever this leg finds support, we would expect it to bounce up to the BBC, the daily BBC, wherever it is at that point in time, and give us another leg to the downside. When price reaches support and can go no lower, it turns around and goes to find resistance. When it finds resistance and can go no higher, it turns around and goes and looks for support. So that's what this is right here. This candle's all about looking for support. Where will the market find it? All right, the 30-minute chart of the S&P. Now, I just showed you the CTAs. You had a chance to take a screenshot if you wanted to. Last night, all of our traders were told, consider being short the S&P at 44.17. Now, this vertical line, okay, that separates today, Tuesday, from yesterday, Monday, from Friday. Okay, so you got Friday, you got Monday, Tuesday, which started last night at, this session started last night at 6 p.m. Eastern. So these lines that extend way back to the left, I just need to tighten those up. That line should not extend past this vertical line because these CTAs are just for today. You can think of a CTA as a daily trading zone. If you understand how we work with the weekly trading zones, once those are published, they're good for the entire week. We've been publishing them weekly now for over a decade. The daily trading zones are good for the entire session. Let's see if we can. I wanted to stretch it, but I'm not going to waste too much time on it. I think the market's starting to pick up some steam. My chart's glitching a little bit. Come on. Alright, didn't trigger, so it doesn't matter. Oh, there it goes. One that matters is 44.17. Okay. It did trigger and it ran straight to the target. We only got one trigger on the 30-minute chart last night on the CTA. On a short alert, okay, logic or CTA, the final trade to target is always the weekly trading zone below. On a long alert, the final trade to target is the weekly trading zone above. So, yes, for the CTA, 44.17 down to 43.97, that would be 20 points. See, the zone is 43.96 / 43.97. So this was a 20-point move, and every one of our traders got this alert last night at 6:35 p.m. Eastern. It triggered right ahead of the London Open. We triggered it, we pulled up just a little bit, and then this candle here is the London Open. Took us right down to the target, 20 points. Now the S&P pays $50 a point. If you traded this alert from the published entry to the published target, that's 20 points at $50 a point. That's $1,000 per contract traded. Lifetime membership's only $5 grand, $49.97 to be exact. If you're trading one contract, this trade given out last night at 6:35 p.m. Eastern, 20 points, $50 a point, $1,000 per contract traded, which brings up a good point. When you first become a lifetime member, a passport holder, as we call it, passport is lifetime access to everything we do, everything we've ever done, and anything we do in the future without you ever paying another dime. Okay? When you first come aboard, even if you have years of trading experience, we do not want you attempting to trade our strategy with real money until you actually learn our methodology and strategy and how to read our indicators, the underlying principles upon which everything we do operates. It's important. We don't want you to blow up another account. You don't either, I'm guessing. And so, your 2420 blueprint will instruct you on exactly how you proceed. In the morning in the live training room, you should be in your simulator, trading side by side with Michael and Valerie, okay? Asking questions as he puts on and takes off trades and explains every move he makes. You ask questions, you trade along, and you learn. You ask and you learn. You ask and you learn. Once you put together 10 consecutive days in a row where you reach your goal in 10 trades or less, the blueprint will give you the green light to go live with one contract. Now that you're trading real money, you have a different goal. That goal is to increase your account balance by $2,000. Once you do that, then the blueprint will give you the green light to add a second contract. Now, the big deal about the second contract is your first contract, that was added with your startup capital. But the second contract is added with profit you earned in the market. The blueprint will always notify you when it's time to add an additional contract. You only add one at a time, and you only add with profit you earned in the market. If you follow that protocol, it makes it very difficult to blow up another account. Not impossible, but you're going to have to break a lot of rules in order to do that. So, price triggers, drops to the zone. What do we expect to happen when price drops to a zone? Well, we expect it to find support. Only 3 things can happen at a weekly trading zone. The most likely thing is consolidation, what you see right here. Second most likely is this, rejection. Third and least likely, but it happens, is the slice. And when price slices through a zone like that, what typically happens is it will retrace back to the zone that is sliced through, and then it will continue in the direction of the slice, exactly like it did there. It's a great example of the slice, rejection, and the most likely thing, consolidation. And so when the market found support at the weekly trading zone, after consolidating, what did it do? Well, when the market finds support, it always turns around and goes to look for resistance. When price rallies up to the BBC, we expect that to be good resistance until proven otherwise. So what does the market do when it finds resistance? It turns around and goes to look for support. And there it goes. And all of our traders who have learned our methodology, understand our strategy, know how to follow the logic alerts in the channel. There was a lot of wide open spaces down here to be short. After the $1,000 per contract move that triggered at 44.17. Now, if you'll notice this low here, see if I can get my cursor to work. I want you to look at the horizontal line on my cursor. From this low, where I've got the little spinning wheel, if you follow the horizontal line across, look at that. That is market structure. You hear me talk about it. Those of you who become members understand it. From there to right there. The market structure was broken at this point, and that opened the door for the bottom to fall out, which it pretty much did. I'm going to close a couple of applications because my charts are starting to hang up. There, close that. I'll close that. And I'll close that. Oh, and Jack had put in the chat box earlier, another Johnson & Johnson employee, scientist Justin Durant, explicitly said, do not get the Johnson & Johnson COVID vaccine. Wow. Thanks for sharing that, Jack. I did not know that. Okay. So, on the S&P. Now, I don't know if this is the market or if I just seriously need a reboot. I think I rebooted Friday. Okay, let's see what it's going to do. See if it'll sort itself out. I want to get down there and have a look because, yep, that's the bottom. Dropping. Our lowest weekly zone is 43.23/43.24. The market definitely looks like it's trying its best to get there. And there we go, the old not responding. All right, let me move quickly and see if we can get through. See, right down here, this is the lowest weekly zone. Okay. All right, let's jump over to the Dow. Okay, the short on the Dow last night was 34,710. Vertical line, opening candle last night. The first drop below the trigger was 683. So that would be 27 points at $5 a point. $135 per contract traded. Then it got back above the trigger and did it again. Okay. Then we got above the BBC, we consolidated, we made a run at the weekly zone overhead, but sellers weren't having it. Okay. Market ground to an abrupt halt, reversed, got back below the BBC, came down, and this time, on this candle, when it triggered this time, it meant business because it ran all the way to the target. 710 minus 625, that would be 75, that would be 85 points at $5 a point. That's $425 per contract traded. Now, like the S&P, we consolidated, then we went down to the zone below, we bounced back up to the zone above, bounced up to the BBC, found resistance, and you can see what's happened. The lowest weekly zone on the Dow is down at 33,840. Okay, so from the published entry to the published target, $425 per contract traded. If you've earned the right, if you've been around long enough to earn the right to trade 2 contracts, then that's an $850 move. If you've been around long enough to earn the right to trade 10 contracts, it's a $4,000 move. Okay. Now, once we hit that target, then of course price just did what price does. It dropped to the zone, found support, bounced up to the zone, went from zone, down to the zone, back up to the zone, down to the zone, back up to the zone. And then we traded across this zone. We consolidated. We had some wide-ranging consolidation. And now price is trying to find its way to this week's lowest weekly trading zone. Today's only Tuesday. Okay. On the Russell. No trigger on the long side. The short side triggered at 22.56. Okay. This time we just got one trigger and it dropped straight to the target. Remember, the target on every alert, the final trade to target, on a short is the weekly zone below, on a long it's the weekly zone above. So from 56 we drop to, the zone is 22.45/46. So that's 10 points, $50 a point, $500 per contract traded. If you've earned the right to trade 2 contracts, it's $1,000. Okay. We then consolidated at the zone and dropped to the next zone where we're consolidating again. Okay. So we've covered the S&P, the Dow, the Russell. Here's the NQ, the CTA. Was a 15,158. Okay, so on the first trigger, we dropped down to 15,132. 58 minus 32. 26 times $20 a point. $520 per contract traded. Then we got back above the trigger, but this one you've got blue and climbing. On a short you want red and falling. So this is not a trigger that you would want to take. Here, again, it was during the life of this candle that that little blue and climbing turned to red and falling. Okay, so if you're going to take a trade like this, okay, you need to make sure that price is below any obstacles, which would be that blue and climbing. Now, price had gotten below it at the time we triggered. So if you took that trade, 58 minus 26 times 20, $640 per contract traded. And then it made a really big move. Okay, look at this move. Leg, retrace right back up to the BBC, which we expect to be good resistance until proven otherwise. And the price continues on its way. Now here we get a slice. See how we sliced through the zone like it wasn't even there? What did price do? It retraced right back to the zone it sliced through and continued in the direction of the slice. Since December 14th, 2009, we've been publishing these zones. The rules haven't changed. The way price behaves around the zones hasn't changed. It's always been 3 things can happen at a weekly zone: consolidation, rejection, or the slice. Consolidation, you're going to see 70-75% of the time. Rejection, 20-25% of the time. The slice, 5-10% of the time. Now, that was the lowest weekly zone this week for the NQ. So we've already broken through the lowest weekly zone this week for the NQ. However, by close of business on Friday, we expect, based on historical data going back to December 14th of 2009, we expect price to be back above 14,880, either at or above. Sometimes it doesn't happen, but for the most part, it does. All right, we've covered the S&P, the Dow, the Russell, the NQ. Let's go to crude. Last night CTA was 75.80. That was the trigger. Okay. And so we triggered 75.80, and I'm not sure what happened right here. I was not in front of the charts at 2 a.m. Eastern. So let's just measure from 75.80 to this swing high. $76.28. So that's $480 per contract traded. From here to here, $480 per contract traded. I'm guessing the servers went down again last night and it didn't repopulate the data. Let me switch time frames and see if it fills. Sometimes that will fill in the gap. Let's go to a smaller time frame. And then I'll go back to the 30-minute. And it filled it in. See? We all learned something. So this move, because the target's way up there. 77.40 is the target. So that's the published entry. That's the published target. We made it to so that's $870 per contract traded. I've earned the right to trade 2 contracts, $1,600. Okay, and then price. See how blue and climbing turns to red and falling. See how red and falling becomes resistance. See how price tries to punch through it, and then we get the confirmation. See the step line? When we triggered, where was the step line? The step line was on the left side of blue and climbing, and price was way to the left of the step line. That's textbook perfect for a long trade. Once the step line crosses from the left side to the right side of blue and climbing, then what you're looking for is the first red candle that closes below the step line. In this case, that would be this candle, and it closed at 76.09. Okay, so that would have only been $290. So whether you stayed in it or waited for the exit signal, the target, again, the final trade to target, we didn't make it. But the market gave us, whether you got out here, here, or here, nice trade. The short CTA down at 74.35, the swing low 74.37. We came within 2 ticks of touching that. Now some say it's magic, it's voodoo, it's witchcraft. It's just math, man. Give me a break. Okay, what's the next high probability move from here? Well, we're printing a green candle. There's the potential for resistance at the weekly zone. We expect resistance when we rally up to a zone. Okay? If price overcomes that resistance, then we expect resistance at the CTA. Now here's what very well could happen, and often does. Price works its way up to the weekly trading zone and consolidates while the BBC plays catch up, and then once those two meet up, whether it's right at the zone, a little bit above the zone, when price meets up with the BBC, we look for another leg to the downside. Okay. All right. 2 more markets, gold and silver. Okay. Here's where the market opened last night. We triggered gold at 1740. That was the trigger. on the first drop, we made it down to 1735.3. We'll just call it 36. That's $400 per contract traded. Right there. Then price gets back above the trigger, triggers again. Important prices, important areas are almost always tested. Now, we had a number of markets that only triggered one time today because there was so much momentum to the downside. But here with gold, you'll see how that concept works most days with most markets. We trigger, and then we come over here and we trigger again. On this trigger, we make it all the way down to the target, which is 1736, which is another $400 per contract traded. When price drops to a zone, we expect it to be support until proven otherwise. As long as the candle is touching the zone, we consider that holding. It's holding on for dear life. Support sent us back up to resistance at the BBC, which gave us another trigger. And support sent us, you got it, and then there's another $400 per contract traded. So we had 400 per contract, and then another 400 per contract. That's what the market made available. 1, 2, 3, 4. But let me say, not all triggers are created equal. Once this red and falling becomes blue and climbing. Now, yes, there's still distance from the trigger to the zone before you hit support. That blue and climbing, just as you expect red and falling to be resistance like it was here, okay? You expect blue and climbing to be support as it was here. So whether or not you took these would be sort of a personal preference, because you know that if you get short at this trigger, this is a kind of a rare example in that you had time to actually make it to the target, which was 1734, which I miscalculated that. 1734, that's a $600 move, because the trigger was 1740 and the zone was 33/34. So that's a $600 move. That's a $600 move. That's a $400 move per contract traded. Now price looks to be dropping below blue and climbing. Okay. Our zone is 1733/34. So if you need a place to pick up your goal for the day, 1735 to 1734 just might be your ticket. That's 1 point. Gold pays $100 a point per contract traded. Okay. All right, one last market. Silver. We did trigger on the short side. Now, some might ask, well, what am I supposed to do while I'm waiting for price to get to the CTA number? Trade. 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 That's what the logic alerts are for. We're now at 8,000. How many? Since we launched Logic 247 165 weeks ago, we're now at alert number 8,498. That was the last alert published today, number 8,498. And so, as you're waiting for price to get to a CTA trigger, you trade the logic alerts. They usually will walk you right up to the door step. Okay, so we get a trigger here at 2228. The zone below is 2214/15, and so that's 13 pennies. 2 pennies, $100. Okay, and we only had the one trigger there on silver. That brings us all the way around the world and back to the S&P daily chart. where this 24% fib is providing some support. Could it be enough? Could it turn the market? Could we open tonight and see a green candle start printing? I don't know. I don't know what's going to happen next. How about you? I know a lot of websites and a lot of the emails that you get are from companies and proclaiming that they've cracked the code, that they now can deliver tomorrow's headlines today. Oh gosh, they're so full of it. They can't. Let me just say it again. They can't. That's not how God created this universe. God did not give Adam the ability to change the past or know the future, and those two things are inextricably linked for eternity. There's no man, no machine, no algorithm, no set of crystal balls, nothing that can predict the future with certainty. Now, what we can do with our indicators, with our strategy, what we can do is we can know with certainty what the next high probability move is. And we can know that with certainty. We can know what the next high probability move is. Now, based on the recap that I showed you earlier for Logic 247, which I have right here. So far this week, 19% of actionable alerts stopped out based on that $300 risk profile. Okay? Now that's over 165 weeks. So while we know with great certainty what the next high probability move is in any market in any time frame, we also know that 20% of the time the market is going to do something other than the next high probability thing. We've got the data to support it. Over 165 weeks, over 8,000 individual alerts, the market has shown us that 20% of the time, what we see as the next high probability move based on market structure and the logic behind how price flows, the market throws you a surprise. Once you accept that and stop fighting it, then getting stopped out is not so painful. It's not such a horrible thing. You understand that it's just part of the business. Getting stopped out is as much a part of trading as breathing is a part of life. True story. Okay, so here we are, the end of the broadcast. Let's go to our good word for the day. Yesterday, we talked about the fact that God actually wants you to succeed. And today, after that encouraging word that God wants you to succeed, something else that you need to understand is that to advance, you must overcome adversity. 2 Corinthians 6:4. In everything and in every way, we show that we truly are God's servants. The Christian life comes with blessings and battles. You can't have one without the other. Paul describes it this way. In everything and in every way, we show that we truly are God's servants. We have always been patient, though though we have had a lot of trouble, suffering, and hard times. Now, this is Paul writing. We have been beaten, put in jail, and hurt in riots. We have worked hard and gone without sleep or food, but we have kept ourselves pure and have been understanding, patient, and kind. The Holy Spirit has been with us, and our love has been real. We have spoken the truth, and God's power has worked in us. In all our struggles, we have said and done only what is right. Whether we were honored or dishonored, praised or cursed, we always told the truth about ourselves. But some people said we did not. We are unknown to others, but well known to you. We seem to be dying, and yet we are still alive. We have been punished, but never killed, and we are always happy, even in times of suffering. Although we are poor, we have made many people rich. And though we own nothing, everything is ours. God will fight for you on your battlefield, take you through your storm, and turn your season of adversity into a season of advancement. When your faith is under fire, it attracts its power, His power, and brings His grace into your situation. In Hebrews 5:8, the Bible says, even though Jesus was God's Son, He learned obedience by the things He suffered. So rejoice. You're not losing, you're gaining. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.